The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Thursday's trade, soybeans, I'd say gained back about half of what we lost on Wednesday across the bean complex. Some decent numbers in meal and oil as well. Corn up slightly. Wheat trade under pressure, though, along with the cattle market. High U.S. dollar back above the 108 level. There's plenty of things to take a look at and unpack here as we talk through Thursday's market action and really the week in general. Joining us now, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you again this week. And, man, what a week it's been. Lose 25 cents in soybeans, gain back 10 to 15 on Thursday.
Right.
Just
Yeah.
what a week it's been so far, Brian.
It's been a week, and be careful. One day doesn't make a market. I don't like the way that wheat and soybeans break support so easy and the ease at which they go down. Yet, on the other hand, Jesse, the more they go down right now, you got to recognize. I mean, the world will recognize the more they're sort of on sale. Okay, so you can project a big South American crop and all this yield, but it's months really before all that gets trickled into the pipeline, and you've got to grow it yet. So the final story isn't written. However, the reality is there's I think a good forecast for the Southern Hemisphere through at least the end of December is what it looks like right now. So that's the market's trading that. It's trading just a lot of uncertainty with a lot of things outside the market. When I talk about uncertainty, I'm talking about what does it look like for sustainable aviation fuel, credits, trying to get a pulse on that. I don't know if anybody does have a pulse on that. Maybe you do, but there's that, and then there's interest rates and the wording yesterday from the Fed chair, and then the washout in the stock market yesterday, and kind of risk off at the end of the year. We have some idea what a Trump administration probably looks like, but we don't know this go around, and they're surrounding himself with some different advisors and cast members. Will there be? So there's just a lot of uncertainty there, and the market seems to be taking that out because the end user just is not overly aggressive in buying, and a firmer U.S. dollar just doesn't help the wheat market. So, and it doesn't really help beans either, with the Brazilian real continuing to break in the new lows. So I can just go on and on. There's just a lot of stuff in the news, but suffice it to say, good rebound in beans today. Corn continues to hold together, I think, well. If it wasn't, think about corn and what they've been battling with wheat and beans, yet continued strong exports.
No, very, very true. Well, and to some of your points there, we can go a lot of different ways here. I think with this soy complex in particular, was it the good old saying, the dead cat bounce on Thursday? You look at charts and more. Do we risk going down to $9 board price soybeans? Cash, I know, is already kind of in that high 8, low 9 range. I think there's some concern out there about that, Brian.
The technical picture has pretty much space underneath it. So when we look at charts, you get space between here and $9. And when I say here, I look at something like, well, March beans, even November beans. All of those have some pretty good space there. You've got some head and shoulders formations on depending which chart you want to look at. They all point into that general area. And when I say general area, $9-ish. So that's the concern. On the other hand, I think I mentioned that, beans kind of went on fire sale. If you're an end user, golly, again, good opportunity to just keep buying. No reason not to buy. But the market hasn't signaled a reason to get it all bought yet. Just buy aggressively because it's paying dividends to just buy as needed. But the point of it is you're not curbing demand down at these levels. You're inviting demand.
What about that corn market too? You mentioned how we've held in here despite all of the peripheral noise, so to speak. We've held here for the most part. We saw some farmers selling on this recent rally, yet here we are in the 440 range and just kind of churning around here. It doesn't feel bullish or bearish. It just feels like this is value. This is our value right now, Brian.
I think that's a good way to summarize it. So the concern is, of course, that when you have a bean market and a wheat market that's sagging or into new lows, that they're anchors on corn, and eventually they take it down. That doesn't have to happen though. Okay, so you can perceptively view and look at the ratio of corn to beans next year, beans to corn. What you do is take November soybeans divided by December corn, and you've got that ratio at about 2.25. So that's not telling farmers to plant soybeans, telling them to plant corn. So you've got things like that out there that also weigh on the market, but it's only December 19th, and the reality is that export sales are running 28.85 or 29% ahead of a year ago. They're at strong, solid numbers. We continue to see daily numbers pop up here and there, but we're selling a lot of corn. And I need to double check this, but to my knowledge, China's behind on corn imports. Maybe that's another shoe to drop. Maybe they start buying U.S. corn at some point here. It is a long time before that second crop safrinha corn is available. You're talking 6 months or more. And you got all the growing season ahead of it. So exports are good. Uh, it does make one question the way the market's holding. Is that 183 yield just too high? And maybe there's an adjustment coming in January. Maybe. Uh, I would also make the argument that maybe the USDA raised feed demand or exports and not feed demand, exports and ethanol, but they might have to raise feed demand because if the corn dried down too quick, and for many it did. We heard a lot of harvest at 11% to 14%, so you lost some weight there. So maybe ultimately we come down in yield or it shows up in a quarterly stocks, but it just kind of resonates that we think I think the crop has maximized its side and maybe has some room to go down. So corn just can't break through. It was a real disappointment after the USDA report. That was a pretty big surprise. I call it a miss. What I mean by a miss is the market had some real bullish news to feed into. It couldn't break resistance. It did claw up and then it quickly dropped back down. But it's got some pretty good support underneath it at this point.
No, very true, very true. Well, and you bring up feed too, and maybe that can help us segue into livestock a little bit, and looking at cattle, dairy, even hogs too. I mean, you look on, especially the cattle side. I mean, box beef was choice was up 680 at midday Thursday. I mean, that market just continues to be quite interesting to watch. But you think about cheap feed prices. What does that do for the equation for the cattle folks? I mean, that's a just I'll call it an interesting market as we near the end of the year, Brian.
Yeah, it's if you're a cattle guy and you've got and you're let's just say you're in South Dakota and you've got cattle and corn. I mean, you're feeding some cheap corn through your cattle, and you're probably going to add some extra poundage on. And so far, the weather's been pretty good. Weight gains are good. I expect heavy carcasses, and so what is the demand? What's driving the market? What is the demand market looking like? And so you look at that and go, gosh, where does this uh, are we getting last minute shopping? Are we getting some shore up? Is there concern with something? So we've got good demand in the market, but it's sure not showing that in the futures. The futures are kind of taking a different approach here this week. Big bearish key reversal on the chart. That just means you break into a new high for a day. That same day, you take out the previous day's low, and then you end up with a lower close. That's a reversal, and that's what happened here in this cattle complex. So as we look at big picture perspective, you start to really wonder, well, what does this look like? Where are we going on this cattle market? I think it looks a little problematic. You've got high price hogs, you got high price cattle. I don't think the economy is that great. We saw the stock market blow out this week, and you start looking at all of those factors, and you kind of got to ask yourself, well, when and how does this demand hold up in these end of year times when you're looking at consumers in January, the Christmas credit card bills,
Mm-hmm.
property tax, uh, heating bills, things that just take some money. So I am very defensive of the cattle market. It's behaved that way. Defensive, not necessarily bearish, but prepared that it could do what it's done. And I look at that as an example, that Feb contract here on the 16th, 3 days ago, 193.22. Uh, look at it today, 186.32. That's a pretty good turnaround, pretty good tail off there.
Very true. Very true. How about the dairy trade? We've been following that with you for a couple of weeks now. We've seen some strength, but wondering, are we seeing a flip around here towards the end of the year, Brian?
We saw some really good activity, and then there again, in charts, we saw a hook reversal on the 13th, which just means the market went, and some of these contracts went into new highs, and that same day finished lower. Today, currently trading down another 30 to 37 cents after a couple of down days here. So we're back under $20. A lot of volatility. Now, if you kind of took the highs and lows out of this thing, you could say, well, since July, we're really kind of consolidating around $19. Uh, but on that January contract, now the lead month, we've seen 21 and we've seen down to almost 18. So you got a pretty good variance there. Um, Good demand underpins the market, but expectations for somewhat stronger production, and we did see that in the last production reports. You saw more production per cow. So efficiency and good milking. Um, I there again, I think it's not a matter of a massive supply or oversupply, but it's a matter of when the market rallies. It just doesn't seem like there's an appetite to pay more than $20, equivalent back to $20 in milk. And the cheese market, when we look at that, was off a little bit today, kind of immaterial, a couple cents in the barrels. But when you add the barrel and block price together, and the old rule of thumb is add them together divided by two, that gives you somewhere around about an $18 average. So the board is right now overpriced until we see that cheese market show more resilience or strength. Whey continues to be the good story this year, but that settled off a little bit. Butter prices continue to be the opposite. Butter was the story into midsummer, and now it's just a big anchor trading near the contract lows, and near 2.5 or $2.51 per pound. So it was trading closer to 320. So dairy's a lot of volatility, but not enough overall net product strength to sustain the upturn in futures.
Brian, any notes in the hog complex for us here, real quick, as well?
If you're a hog producer, you've got corn that's cheap, meal that's cheap, and you've got $100 plus hogs for summer months. Be taking advantage of that in some capacity. Talk to your advisor, look at the best tool, whether you just want a straightforward contract. I think that the hog market has room for expansion. Wild cards that we don't know about. We talk about dairy. Just trying to get a handle on this whole disease issues and bird flu and things like that. So you'd want to think the hog market is well supported, but I also want to take your listeners back in the hogs. That if you're a hog producer, we're seeing some pretty good premium traded to where the market was. So, example, I just happened to be looking at the June contract, again trading over 100, but it wasn't that long ago in mid August when the market was at 85, and since then the dollar has been rallying and hogs have rallied. So it's going to get tougher to export, and it's a solid price given the input structure.
Very true. Very true. Brian, always enjoy the conversation. Final thoughts from you, big picture perspective things as we head into the holiday season. What do you want folks to remember?
Yeah, so kind of what I'm going to say is keep on it. So on this, let me just address the bean thing again. Bean thing got kind of ugly here pretty fast, right? So as we were looking at things here several days ago, and we talked to farmers all day long, but there's kind of one group of farmers, and I'm not pointing and making judgment, pointing fingers, but they're kind of like, well, I'm just going to wait to the end of the year. Things are what they are. Things are cheap. I'm going to bury my head in the sand. Might be a good approach, but it's an approach. Others, it was like, boy, there's some underlying current here that I don't like, that I've relating that, or I'm concerned about what this might look like if it starts to tip over. My point is, I want to encourage us to never kind of take our eye off the ball. And the second thing is, We've been here before in these tough market environments. You as a farmer have been here before and you're still here, right? So we look ahead and a lot of guys are kind of questioning why they're farming and can they get out of this, and there's no end in sight. Things do change, so keep optimistic, but get that heavier crowbar out and start prying it under every rock and look and see where you have an opportunity, or talk to people like me. And I'm not necessarily encouraging people to do things in the marketplace. That's the space I work in, but selling call premium, collecting revenue, challenging the market, looking at the right tool, keep at it is my point.
Brian, if folks want to reach out, have a conversation with you, and work with you and your team there at Total Farm Marketing, I know a few different ways to get in touch. How can they reach you?
I would like a phone call first, so I'd appreciate that. I always like to hear. I listen and hear, two different things. 800-334-9779. And then if you'd like an email, Brian with a Y, so Brian at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. A lot of good resources there. If you want to learn more about options, I've got a book in there that I wrote, or a pamphlet, it's free. It's called 12 Option Strategies for an Uncertain World. Take a look. Good educational piece, good resource.
TotalFarmMarketing.com for more. And with that, Brian Doherty, always appreciate it. We'll wish you and yours a Merry Christmas, Happy Holiday Season. Thanks as always for joining us here on Market Talk.
My pleasure. Much appreciated. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.